And so welcome everyone. In this session, we will welcome Kelly Cochran, who is the Deputy Director at FinRegLab. FinRegLab is an innovation center that tests new technologies and data to inform public policy and drive the financial sector towards a responsible and inclusive financial marketplace. So with Kelly, we will talk today about explainability and fairness in machine learning, which is a great topic, and we can probably spend plenty of time discussing this. So let's get started, Kelly. So you are a doctor in law. How did you actually get involved into mathematical algorithms?
Well, I've always been focused on economic opportunity and participation, and machine learning and AI and different forms of automated decision making are really key to that, especially in financial services. So it's been an area that I've been focusing on for several years.
Okay. Um, but still, I mean, for a mathematical person, there seems to be a quite big gap between, say, law and algorithms, or do you think of law as some sort of algorithmic, an algorithmic problem?
Oh, that's an interesting question. I think of them as somewhat different, but I think that one of the things that's really important about AI and automated decision making is the fact that it raises questions that are not just technical in nature. They really require a multidisciplinary approach. So I am, have some background in quantitative work, but I think a lot of what I'm bringing is from the law and inclusion side, qualitative research, working with a lot of market actors to really understand how things are being implemented in practice and how market practices as well as the technology are evolving. So that's my background and my lens as I approach these topics.
Okay, well, that's very interesting, and indeed, I'm sure we will touch on that. But yeah, many questions related to explainability also require incorporating the viewpoint of different people and trying to
Exactly.
make sense of all of this. Okay, and so today you are working at FinRegLab. So could you maybe explain what this lab exactly does and what is your role in that organization?
Sure. So we are a nonprofit research organization. We're headquartered in Washington, D.C., and we do a number of functions. We really focus on the use of data and technology in financial services with an eye towards financial inclusion and customer protection and other issues, including things like model risk governance. We've performed several different functions. One is testing technologies, working with different companies who are deploying them in the market to understand and tease out different aspects that can help inform kind of the broader ecosystem as we think about how market practice and public policy have to evolve. We do a lot of qualitative and kind of market monitoring research where we're understanding how our empirical work fits into kind of the broader ecosystem and how things are changing. And then we do a lot of convening work where we're bringing people together from a broad variety of backgrounds, different segments of industry, consumer advocates, civil rights groups, academics and policymakers, and really trying to understand where there's potential, both potential benefits and potential risks that have to be managed as different technologies or data sources are being adopted in the marketplace. So I'm the chief program officer, so I can oversee the spectrum of our work. And my background is I was formerly at the Consumer Financial Protection Bureau in the US. I helped to stand up the organization and led the Office of Regulations for several years. So.
Okay, well, that's sounds like a broad range of activities. If you're talking about testing technology, what type of technology do you focus on in that context?
Most of our work so far has been related to credit issues. We've done a lot of work looking, for instance, at the use of bank data, bank account transaction information, or other account transaction histories as a potential source of information for credit underwriting to supplement and fill some of the gaps that we see in traditional credit bureau data, for instance, in the US. We've looked at machine learning in the credit underwriting space, explainability and fairness research that you mentioned, and we're looking at other aspects of inclusion and predictiveness and so on as we continue to research in that space. Over time, we expect that we'll be expanding into other areas as well. We're certainly monitoring AI is, showing up in all sorts of different aspects of financial services, and we're thinking about additional projects focusing on things like identity, fraud, and other aspects of how it's being implemented, even to things like delivery of tailored financial advice for consumers. So it's a real spectrum of
Mhm.
work, and we're monitoring kind of, technological developments even beyond what we're testing on the empirical side, and engaging with different folks as we kind of see the potential and when it makes sense for us to get involved and help kind of trying to form a fact base so that everyone can engage more efficiently and really figuring out some of the tough questions as adoption and innovation change over time.
Okay. And you started focusing on credit underwriting, I assume, because there, if indeed you use, for instance, technology or specifically then algorithms, the impacts on consumers is, of course, extremely big. Is that the reason why you chose that specific problem to focus on initially?
Sure. I mean, credit has such an important impact for both consumers and small businesses. It really is a gateway to broader economic participation, both in terms of bridging kind of short term gaps in inflows and outflows, but also kind of building long term capacity, investing in home ownership, reliable transportation, small business formation, all of those kinds of questions. And automation has been used for a long time in the credit underwriting space. It's not a new concept, but as we're
Mhm.
seeing these new technologies, really trying to understand where they have the potential to be a win-win and where they may pose risks for different populations, particularly people who've been kind of historically underserved or are kind of more vulnerable to financial disruption. We really want to make sure that the adoption of these technologies is done in a way that's sensitive to their needs and actually can potentially benefit them, and maybe fix some of the gaps and shortcomings of the kind of past historical approaches to underwriting and data in this space.
Okay. And indeed, then if you start working in that space, obviously, when you are then confronted with the outcome of a machine learning algorithm, for instance, it's very important to be able to kind of convey how it came to a particular conclusion. Is that, say, how you would define explainability in AI as a starting point, or should we look at this in a more, say, principled fashion?
Yeah, so I think a couple things on this. I mean, one thing to keep in mind here is that the types of machine learning that we're really focusing on in credit underwriting tend to be supervised machine learning with pretty curated data. This is not generative AI, the kind of things that are being used in Chat GPT, for instance.
Hmm.
That's a much more complicated space with much more complicated models and much bigger data sets. So I think it's important to kind of make clear what type of
Yeah.
machine learning or AI we're talking about. Explainability is a really important topic for both kinds of AI, and we need it for a whole bunch of different purposes to different audiences. So there's no one single clear definition of explainability that necessarily works, and there are different tools that we may want to use in different places to speak to different audiences. So you think about the lender and their internal systems, model developers, compliance folks, business executives, all of those people need different explanations potentially of what's happening with the model and how it is functioning.
Mhm.
Then you have regulators, they need explanations. And then the customers, in some cases, need explanations. In the US, at least, we have what's called adverse action notices, which are required to be given to consumers when they are, for instance, either turned down for a loan or if they're priced higher because of their risk profiles. And so we have a very specific context in which we were looking at explainability to consumers. But you really have to think about all of those other audiences. What is their kind of technical background? What information are they really seeking for what purposes, and how do we deliver in each of those cases?
Mhm.
So there's a lot that is tied up in that, and there are different techniques that we're seeing emerge as to how do people manage that in credit underwriting. Some people are really focused on the use of the model architecture, that they build a model that is not as complicated because they really want to be able to understand kind of how it is functioning. Other folks are applying what are called post hoc techniques, which are other data science techniques that they're applying kind of from outside the model to understand, for instance, which inputs are driving the outcomes, have the most important role. So, and some, some lenders are using a combination of both of those strategies to kind of manage and get the kinds of explanations that they need to feel comfortable from a model risk governance perspective and from a compliance perspective, things like adverse action notices or fair lending compliance, those kinds of questions. So it's really an interesting time because the technologies are evolving. People are trying to think through the compliance side of this, our expectations, how it's worked in the past, and how we need to evolve processes, and outputs going forward. So it's a really dynamic space right now.
Yes, and a very big topic, I imagine. Maybe before we dive into more details, like
Mhm.
how do you actually define, because it's something I struggle with as well. What's the
Yes.
difference between a good and a bad explanation? Is there any way to quantify this? Are there any aspects of uh, like a good explanation that are always there? Can you comment on this?
Well, when we did our research, we were working with some researchers from Stanford University, and we looked at some of these post hoc tools that I mentioned. So,
Mhm,
different flavors. Some of them were open source, so some of them were working with vendors that provide these kinds of
mhm,
services to lenders and other companies that are developing machine learning models. And we looked at a couple of different dimensions when we did it. We looked in. We we up kind of did the tests in three different areas. So adverse action, for fair lending purposes, we looked at which inputs seem to be most correlated and might be driving disparities in the outcomes between different demographic groups. And then for model risk governance, we were looking at just what are the inputs that are really driving the model the most overall. So
mhm,
within each of those, we applied the tools and we were doing a couple of different things. First of all, we were looking at um, kind of the accuracy, like are they really giving us the most
mhm,
important factors? The second thing we looked at is some measure of consistency in terms of whether we were getting the same answers across different tools. And then the third aspect was usability. That is very audience specific. So we were thinking about this in different ways and, for different purposes and in terms of some are going to consumers, some are not. And what do these audiences most need to know with the information? What are they going to do with it, for instance? So it's the short answer to your question about is there a good explanation is it's really, really context is specific because it's a question of what audience are you speaking to, what do they need to know, and is the tool delivering that information in the right
mhm.
way? So it's in each case, I think we're kind of getting to different
Okay.
questions and different answers.
Yes, and I understand that sometimes it's fairly context specific and technical as well.
Mhm.
However, even from a say non-technical point of view, it's not like let's take one example. So you mentioned that there is basically two categories, like explainable AI, so
Mhm.
building using algorithms that are inherently explainable somehow, as
Mhm.
we call them. And on the other hand, you have the post hoc tools who
Yes.
after the fact would say be used to understand somehow the behavior of a black box algorithm. Now if we go at first to the first category, clearly, if you build, say, a linear regression model, that's
Mhm.
clearly very explainable in a way that everyone can look at the coefficients of the algorithm and understand what are, say, high and or small and large coefficients, and that would then contribute to, say, important and unimportant features. Now, if you then have, if you have, say, 10 inputs to such an algorithm, then it's clearly a simple algorithm that everyone should be able to kind of understand. On the other hand, if there is 100 of
Mhm.
1,000 or maybe 100,000 inputs, then even a linear model becomes rather complicated to fully understand, right? So I'm always struggling to try to really pinpoint what does it mean to be explainable in that context. Have you any research on that or any data on this that we could use?
Yeah, so a couple of things there. I think, you know, people are used to using linear regression and more traditional techniques in smaller models. They've gotten very comfortable with that. I don't know that that necessarily means that they truly do understand everything that's happening in
That's
the
true as
model.
well.
Just they've gotten used to it and kind of know what information they're looking for what purposes, right? And I think that's one of those places where maybe using some of these postdoc tools will tell us things that we didn't know before and will help us really grapple with what's happening with the data. But it is certainly true that, some of these machine learning models in particular have many more inputs than what we've seen in kind of prior generations of underwriting models. And it does create some complications. We really tested it in the postdoc space and thinking about machine learning models more than your question about on the regression side. But I think there's a couple of things that are standing out to us. One is that grouping the inputs that are similar to each other can help with the explanation. So let me take the adverse action context because I think that's a pretty intuitive way to explain it. In U.S. law, generally you provide 4 to 5 major inputs. It's meant to be the primary drivers in the adverse decision. That's kind of the way the guidance is set up. But if you think about a model that has maybe 12 or 25 inputs and you're providing 4 or 5 of those, you're getting a pretty big chunk of the model and the explanation. If you're suddenly giving 4 to 5 reasons for a model that has dozens or hundreds, you're just as a matter kind of a math, you're describing less of how the model interacts. And there's often times where some of these inputs may be very closely related to each other. So you may have 10 different flavors of delinquencies at 30 days, 60 days, 90 days, different kind of product types or whatever. You're just getting much more granular in what you're doing. And so some of our research suggests that grouping together like features can have some advantages in terms of the consistency of what you get back and your ability to convey a little more about kind of what's really happening with the model. So I think that has interesting implications for both the technical side, like how do we apply these tools and really get the most out of them, for lenders' internal purposes and regulators and everything else. But it also potentially has some important questions that we have to grapple with from a regulatory side about these disclosures to consumers and what are they really trying to accomplish. Um, I can talk more about that. There are multiple policy goals in that space, and they might actually kind of push you in different directions as to how you answer the question. But it is definitely true that really kind of doing some level of roll ups and really understanding the nature of the data that's going into the model, where are the correlations and those kinds of things can be really important to make sure that we are kind of getting the most out of the explainability tools and really understand what they're telling us.
Mhm.
And that's covered in our research in more detail. But yeah, I think that's a really important piece of it. And when we're talking about these more complex models, with just a lot more feeding into them, it is definitely something we have to think about in terms of kind of how we manage the analysis and monitoring on the back end.
Okay, and that's also related, I imagine, to then how to actually explain the results of an algorithm to also like non-technical people, of course, people who are impacted by the outcome of the algorithm. So you already mentioned trying to reduce the dimensionality of the problem, basically like limiting the number of features or grouping features together.
Yeah.
Um, Other tools that are sometimes used are like creating counterfactual examples.
Hmm.
Does your research also include these type of approaches?
That's not an area we spent as much time with. And I think in general, what we were really focused on was more the kind of what are the kind of technical outputs that the tools are giving us. There's an additional step as to how you translate those into a consumer disclosure that is not the space where we've spent as much time
Hmm.
testing. But I think there's, a couple of really important things to consider there, and we're definitely seeing tension in the U.S. space with the nature of the adverse action disclosure and what it's
Hmm.
designed to accomplish. Right?
Exactly.
It has multiple policy goals underlying it from the beginning. One of them is kind of an accuracy aspect, that you're notifying the consumer of kind of some of the big drivers, because if some of those are incorrect, for instance, there's an error on their credit report, that can potentially allow them to go correct that error and go back through the process. At the same time, there's an anti-discrimination kind of rationale for it, that you're explaining what you are using at the same time that you're explaining what you're not doing. Um, and then there's a question of consumer education. The decision, the model is the model, but part of what we're trying to do is also help consumers potentially navigate the space, get better outcomes over time, because they learn more about how to manage their finances in a way that will improve their chances. But those all go in different directions as to what exactly you should be doing, especially if you're only giving 4 or 5 reasons, right?
Mhm.
And is it
Exactly.
backwards looking to the model that just applied, or is it forward looking? Is it really, really specific because we're trying to figure out if there's an error, versus kind of rolled up, which might give them a better sense kind of overall of what's happening and how they could change their behavior going forward? So I think those are the kinds of things that we're really struggling with. It goes back to the point about it being very context specific as
Mhm.
to the audience and what's actually most useful to them. Maybe there are ways to do multiple things here, but I don't know that we can do it all with a single set of 4 to 5 answers. And we do have to think about kind of information overload from a consumer perspective. So it's really important to be crisp about what the audience is, what their needs are, what we're trying to help them do with the information, that usability aspect,
Mhm.
and then work backwards into kind of how do you translate the technical outputs of the tools into a format, the information that's kind of most
Mhm.
valuable to that audience. So,
Okay, so as you mentioned before, the explanation needs to be context specific, and then probably also the methodology that you use to create the explanation might vary as well, depending on the context.
I mean, from a consumer perspective, I'm not sure they would care so much about that methodology question, but from a compliance perspective, it may
Mm.
well be that the regulator would, and
Yes.
we're seeing, the CFPB, the Consumer Financial Protection Bureau, has been issuing some guidance, really emphasizing to people that while there's a list of kind of sample reasons that are put forth in US kind of regulation, people shouldn't just be picking the one that's closest if it's not really the reason that the consumer
Mhm.
is being rejected. So we really have to think through this kind of whole set of um, requirements and policy objectives, and kind of modernize it. I think
Mhm.
really kind of make some choices about what we're trying to accomplish and what's most important. Are there different ways to
Mhm.
get to different things? One thing I think that is particularly tricky for an explanation for consumers is a static disclosure or a piece of paper can only tell them so much. Things like counterfactuals or online tools where they can, potentially play with different hypotheticals might be a really useful education tool, but that's not the way that we've kind of set up this regime to work right now. But
Mhm.
there have been some tech sprints, and, I think people are thinking about some of the ways that we could potentially make consumer education more valuable here. But we do have to make some decisions. And one of the questions is, is it the data that's important? Is it the type of, um, underwriting model? Does it matter if it's machine learning or regression from the consumer's perspective? I'm not 100% sure it really does. Like I said, there's just a lot of embedded communication decisions, as well as kind of the technical side of, are we applying the right tool to the model and getting results that we can rely upon? So.
Okay, that's very interesting. And maybe one last question, as we are almost running to the end of this conversation. Where do you see this regulatory landscape evolve? Like, what are the main themes in the next 12 months, say?
Well, it'll be really interesting to see. I mean, I think one of the things that is happening is that we're seeing the advancements in machine learning and the interest in AI really pointing out some of the places where regulation is not as clear. Maybe from the past generation, it's never been super clear as it was applied to older types of automation. And so now people are really pushing on it because, ML and AI are forcing that direction. Adverse action notices are definitely an example of that. I think we're seeing it in fair lending as well. And in the US, the concept of disparate impact and searching for what are called less discriminatory alternative models. Lots of questions about how do we do this in an environment where we have far more computer power and new techniques to use, and how do we evaluate the options that come out of that going forward. So, I think more generally, we're seeing a lot of interest in model risk governance and in responsible AI, which is helping different groups of industry really start to think through risk management in a different way. It's pretty familiar territory to
Mhm.
banks, in financial services, but we're seeing a lot of discussion about that. A lot of that's at the level of kind of principles based right
Mhm.
now, as opposed to really specific regulatory requirements, but it's a really helpful discussion. I think what I keep hearing people say is they do want more information about the tools, the metrics. How do we get in and measure and really benchmark some of these broader principles in specific settings? And, in lending, especially in the US, we have lots of regulatory infrastructure there. It's built out, but even in other aspects of financial services, it's not, fair lending requirements don't necessarily apply in other spaces for other activities. So I think it's really building out those questions. Regulation is a part of it, but a lot of it is is starting with kind of some more technical issues, business practice questions, as we really identify how we can work with these concepts and apply them in different settings and across sectors as well. So just tremendous growth and so much energy put into it. It's going to be
Mhm.
really interesting to see where it goes.
Yes, absolutely. I fully agree. And thanks a lot, Kelly, for this great conversation about explainability. We learned a lot, and as always, it's very often about the context, and the context needs to be right. Depending on that, probably we will be able to make a lot of progress. So thanks again, and
Thank you.
bye
Really
bye.
enjoyed it.